on how metals are faring. Manisha is now joining in. Manisha.
Well, thank you for that, Reema. Well, it's a second straight day and we're looking at very sharp cuts coming across commodities, and I'll put metal in focus right now. You know, the tariffs have come strongly huge for China, which consumes and produces nearly 50% of the world metals there, and that's exactly the reaction that we are seeing right now. Also, ahead of all of these tariffs, US had shipped in a lot of metals also. So, it really is about buy the rumor and sell the fact kind of situation that we are seeing coming in for metals at this point in time. I'll start with copper, where we have seen very sharp declines, 8% down in this week, and it's come off 10% from its all-time highs that we saw in the previous week itself. With this kind of a decline, we are trading at a 1.5-month lows in case of copper on LME at this point. Aluminum is down 5.5% over this week, and if you look at this year as well, aluminum now has turned negative for 2025. It's down 5.5% for the year as well. Aluminum currently is trading at a 9-month lows. Zinc is another one, down 5.5% for this week. It's down 10% for this year now, and that one also is trading at around 9-month lows. So very sharp cuts coming in for the metal prices for the last couple of days here. And it's not just about the base metal prices. Steel is now trading at a multi-month lows. You have iron ore prices, which are down nearly 6% this week. That one is trading at a 5-month lows as well. Silver, which is now counted almost like a metal, is also seen very sharp decline. It's down 8% in this week, and silver is now trading at a 1-month lows as well. So the decline clearly coming in across board, but the major of sharp cuts really coming in for aluminum and zinc. These two metals for the year now have turned into negative, which was positive until previous week. So clearly, these are the two metals hit the most.
Oh, absolutely. And it's a global risk off, right? I mean, people are just moving away from risk assets, whether it's stocks or even some of these commodities that have, run up quite a bit. And it's just a quick pile up into US Treasuries, which explains where the yield is 3.9 on the US 10-year. So we know where the money is going. It's all going into US Treasuries for the time being. Aditya Welekar, Senior Research Analyst at Axis Securities, is with us. Manisha, thanks very much for that roundup. Let's take this forward with Aditya. Aditya, so given that this is not about demand supply, this is a market moving entirely on sentiment, what would you advise people to do with listed metal stocks? I mean, Tata Steel, Hindalco, 9-10% of a decline coming in. So for anyone who's got a trading position open, what should the course of action be?
I guess, yes, the risky assets are taking a backseat. So it's a risk of sentiment. And what we have seen is that post the Feb 12 tariff announcement from President Trump, there was a rush from exporters to push the metal to US to take the advantage of higher physical premiums in US. So that arbitrage window is now getting closed as the actual tariff announcement is materializing. So that's why we have seen that the LME copper, aluminium, and zinc, they have withstood the initial tariff announcement and the prices were strong. But as the arbitrage closes down, so there is no momentum or no incentive for traders to push the metal to US. And that has led to a sudden decline in the LME aluminium prices and other base metals since last couple of days. So that's number one. And number two is now the question is arising on the medium-term demand and how that will pan out, because the supply chain, because of these reciprocal tariffs, that comes into the question, because most of the Southeast Asian countries where the reciprocal tariff is imposed, and also China. So how the metal will flow ex-US market, that is also one of the reasons where the demand picture in the medium term is coming. And domestic US demand is also come under question. So all these factors indicate that if the demand dynamics ultimately gets dented, then the prices, commodity prices have to reflect downwards. So in general, we have seen in last couple of years that the metal cycles are not moving secularly upwards. The cycles have become shortened and volatile both. That is because the major consumer, China, the property sector is not picking up and it has stagnated. So we have to play in a very short volatile cycles. We have to capture the cycle at the bottom when the valuations are very lucrative and at the bottom. And we have to exit when the valuations are expensive. So now we foresee some further downside from here if the stock prices correct maybe by 10%, another 10%, then the valuation becomes attractive. And then once again, we can think of entering the cycle. But as I said, the cycles will be very short and volatile both.
10% lower for both ferrous and non-ferrous from here on?
So recently the non-ferrous prices were strong, and those have corrected since last couple of days, and the prices may correct further. So it's likely speculative to point out the quantum of correction. But for ferrous now, the situation, the ferrous space has already taken a lot of hitting, and we have seen that the steel prices have kind of bottomed out, and the steel mills have taken price hikes post the 12% import duty, safeguard duty announcement. So steel mills have taken price hikes to the tune of 1,000 to 2,000 rupees as recently as last week. And the positive point for ferrous is it is not it is slightly localized commodity as against non-ferrous. And also the coking coal prices have in the range of $170 per ton. So the kind of spread for ferrous, which is the difference between the prices and the raw material, that is coking coal and iron ore, that spread is kind of preserved and is improving. So ferrous at this point of time looks okay as compared to non-ferrous, because for non-ferrous now the fall in the price trajectory has just begun, and if the demand destruction happens, then the prices may come down further. So that's the entire view.
Aditya, main issue is this last point you mentioned, right? I mean, fears of demand destruction, overcapacity, and demand destruction on the other side. That's the basic issue. That's the basic fear going ahead.
That's the basic issue, and the narrative was that non-ferrous metals, they have a structural demand tailwind because of the electric vehicles, because of the renewable energy and all those developments. But with Trump coming in, and a lot of those narratives are getting sidelined, or there is a lot of uncertainty on those narratives also. So, and there is we don't have to forget that China is still producing a quantum of metal, which has to, and its exports are still at a very high level. So it has to divert those exports to somewhere else. And with the protectionist policies coming from Europe, US, and elsewhere, South Korea, so there is a lot of question mark on where this metal will flow. What will be the stockpile, and where that stockpile will flow. So all those things is weighing on the metal prices.
Okay, got that. Aditya, thank you very much. Good speaking with you, and quick view there.